Ladies and gentlemen, welcome to another episode. We have a special guest for all of you this evening. He's a mortgage advisor, so do stay tuned. This is BizTalk OnxOn. You guys know the drill. Let's go! A very good evening to each and every one of you. How are you guys doing today? Welcome to the 16th episode of BizTalk OnxOn. This is Fazlin. I would like to welcome all of you to another exciting episode. Tonight, we have a special guest for all of you. But before that, I would like to introduce my co-host, none other than Mr. Ardy Ismail himself.
Hey, Fazlin, thank you. Hi, Fazlin.
All right, so let's introduce our guest for tonight. But before we do that, I would like to show a short video of himself. So those who are tuning in right now, please enjoy.
I've been working in the bank lah for a couple of years. Then kita tengah duduk-duduk berbual dengan some of my friends. Then then cakap, Shamir, kau kerja bank kan? Sekarang aku bayar 3.75% per annum tau my bank loan. Then I look at him bro, asal kau tak refinance? He look at me back, refinance apa tu bro? So dari situ I just compare lah all the different rates for him. Then I settle all the paperwork and then we submit to the bank. But because I'm an employee of the bank, realize that actually the banks pay a referral fee for every successful loan. So I cannot collect lah kan because I tengah kerja. So dari situ makin more and more request datang. So my niat is just to tolong orang kan, to save some money on interest. I mean if they can save $3,000 a year pun okay juga. So if you want to buy an EC, you want to buy a private property, what are your options? So it is not only for just refinance, switching from one bank to another. I can also help you when you want to purchase a private property and you don't know which bank to go for. Sekarang I dah tak kerja dengan satu bank. I kerja dengan semua 16 different banks yang kasih bank loan for your property purchases. Doesn't matter lah, dia HDB ke, EC ke, private property. Kerja saya is to compare all the different packages for you. I am on your side, I tak bias. I independent and the service is free.
Alright, so without further ado, let us introduce a mortgage advisor. He has been doing this for the longest of time. So I guess if you guys have any questions that you need to ask, feel free to just leave your questions in the comments below, right? Alright, so here is Mr. Shamir.
Hello. Assalamualaikum semua. Thank you for having me today.
Waalaikumsalam.
Waalaikumsalam.
How are you, brother?
Good, Alhamdulillah. Thank you so much for asking. I love your voice, Brother Fazlin.
Oh, thank you very much.
Fazlin
Lama
only
training
how
tau.
about me suara aku tak sedap
Tak boleh bro, tak pas lah, lama. You must learn, in another life, I probably be a radio DJ.
Alright, so before we start, let's just see who's tuning in right now. We see Mr. Dexter. Mr. Dexter, he's one of our guests in one of the last previous episode, if you remember, Adi. He's from antihack.me. He says, yes, Jewel, a lot of people nowadays because everything is open now. Alright, so to those who's tuning in right now, thank you so much for tuning into our episode tonight. Right? And especially to those who will be listening to our podcast via Spotify much later. So, so if you guys are tuning in, please like and share and post as much and as widespread as possible, because by doing so, it'll only encourage both me and Adi to produce more content that would be beneficial not only for us but for everyone. All right, so thank you once again, we appreciate it very much. So let's now focus our attention on our special speaker, the man on the hot seat tonight. So, Mr. Shamir,
Mm.
perhaps some people out there who doesn't understand what mortgage means. I know what mortgage is, Ardy knows, and a lot of others know, but maybe there are some people who doesn't really know what exactly the term mortgage means. What's mortgage?
Okay, so it's very simple. Whenever you want to buy a particular property, okay, and if you need to take a loan on it, okay, takkan the bank want to give you for free, right? The loan, they need to be secured. They need to be, hey, you're gonna take 300,000 loan from me. I got to take something from you, right? So in the event that you don't pay, then at least I can liquidate something. So liquidate means to sell off lah, something that belongs to you. So the property belongs to you, but the bank will take a charge over it, okay, and say if you sell, if you don't pay your loan, then I will take over your property and sell it in the open market. So that process is taking on a mortgage over the property. So basically, it's just secured loan lah.
In Singapore, basically, there are no other ways, right, to actually finance a property besides if you don't have, the 100%, you basically need to get a loan from the banks, right? Are there any other ways besides bank loans, Shamir?
I mean, apart from the banks, of course, you have private financiers, right? So you have other finance houses like your Singapore Finance, Hong Leong Finance, and then you do have smaller capital players. What I mean by capital players, these are like your Ethos Capital, IFS Capital. So these are some of the other form of lenders. At the end of the day, they will still take a charge over your property. So in the event that you default, then at least they have something to fall back on.
Okay, what do you advise? Do you advise us to go to those already established finance institution or those smaller ones? What do you think? Would a smaller institution give you a lower interest rates?
Okay, not necessarily. Actually, usually they are the last resort. So usually people with credit issues might consider them, or people with financial issues might consider them. The rates will definitely be a little bit higher than market. If your credit is good, you're an employee working for an MNC, you're working for the civil service, working for the government, then and you've been working a couple of years, so just stick to your top 3 local banks. You have your Malaysian banks, Maybank, CIMB, you do have Citi, you have HSBC, so these are some of the other players that you can consider as well.
Right. So that leads me to my next question is, which bank offers the best interest rate right now as we speak?
So that's a favorite question that I always receive from everyone, right? What is the best rates right now, Shamir? But then again, I have to qualify, what is best to you may not be best for me, right? So what is suitable for you? So they always want to know the best, and they think that the best is always the lowest. But it's not necessary. There are always a catch to it, right? So you want this particular rate, maybe it's a floating rate package and it's lower than the fixed rate package, then you are okay to take on that kind of risk. You are quite savvy, you monitor the trends, and you feel that, okay, I don't think that the rates are going to increase in the next 2 to 3 years, so you go for the lower rate package, which is usually the floating rate packages. And then you have the fixed rate packages. So fixed, usually they want some kind of certainty. You want to be assured that the next 2 to 5 years, usually the banks will not change their rate, so they will fix it. But subsequently, it will change to a floating rate. So it really depends on what is the rate at that point of time later on. So as long as you have someone to advise you accordingly, right, what is the trends, then and do the comparison with you, then you'll be able to make a better decision.
I see. I think this is all up to preference in that sense, isn't it?
Yeah.
Because for me, myself, I'm more comfortable taking a fixed rate rather than a floating or a SIBOR rate, because I just feel more assured in that sense,
Correct. Whereas for Mr. Ardy, he's always in the markets, right? So he knows the interest rate trends better than me sometimes. So
Really?
yeah. So he needs to be able to forecast, right? How much money, because the interest rates are affected by several factors. So these macroeconomic factors, what happens in the States, kalau dekat sana, US, batuk, kita kat sini dah, bersin lah kan. So,
so Shamir, is it right to say that, whatever happens in the US and what the Federal Reserve policies are, it will affect the interest rates in Singapore as well.
Definitely, yeah. There's a definite is whatever they do there, it will definitely affect us here.
Okay.
Okay.
So that means if someone were to actually really, if they really want to project to the, and understand the trends of interest rates, they really actually need to understand what the Federal Reserve is going to do, right?
Correct. Yeah.
Okay.
So I think Ardy mentioned, you have SIBOR package, right? So SIBOR tu apa? Diorang cakap CIBOR, tapi dia bukan CIBOR lah kan. So SIBOR actually means, for the benefit of the audience kan, it's Singapore Interbank Offer Rate. So in very, very layman terms, okay, of course it can get technical. What happens is that, the bank is in the business of collecting deposits, but takkan dia punya deposits buat dek je kan. So they have to lend out lah to their home loan customers, for example. So maybe today they collect 100 million, but they lend out 110 million. So DBS will then call up OCBC, bro, you ada 10 million tak? I nak pinjam for 3 months ah. Then OCBC will say, ada 10 million, I lend you for 3 months ah, but my rate is 0.55, okay? Boleh? Then DBS say, okay, boleh, hantar sekarang. So they will hantar lah the money over kan. So it's for DBS to balance off their books. So the banks do this among themselves. So part of their asset and liability management. So, and that's how the rates are determined. It is transparent, it is easily Googleable. On ABS website, you can see what are the latest SIBOR rates. So that's what happens. So, and there are also like other funny terminologies like swap offer rate, which is pegged to the US mainly. In terms of the exchange rate between Sing dollar and US dollar, and then you have fixed deposit rate, and then you have home loan rate, and then you have board rate. So you have all these different terminologies that the bank creatively come up with lah kan. But essentially, it's a floating rate, can change anytime.
But it fluctuates almost daily, isn't it? For busy people out there, they don't have all the time in the world to go and check, the rates every single day.
So what happens is that you just wait for the letter to come from the bank, right? You wait for the letter to come from the bank. The bank will say, Mr. Fazlin, your rate will be changed from 1.5% to 2% effective from 1st of September 2020. And then you'll be like, by the time dah
start goyang,
Yeah.
Right. Okay, so that being said, say for example, if I just bought a private property in that sense. So what are the ideal number of years that I as a buyer should take?
Okay, so the number of years actually depend on your age. Right? So if you're older, the older you are, the shorter your loan tenure.
Right.
But let's say your question is targeted at those 30 years old or 35 years old. You can qualify for, if you're 35, you can qualify up to 30 years for a private property purchase. Okay, and then if you're 35, you can qualify up to 25 years for a HDB purchase. Okay, so for our community, of course, there's always the intention to want to pay down as fast as possible, so they will take a shorter loan tenure. But from a strategy point of view, normally investors will go for as long as possible. There is the effect lah. So why you take longer, right? You take longer because your monthly installment drops. You take shorter because your monthly installment naik. So you think that you're paying down the loan as fast as possible lah.
Do you encourage HDB buyers to take up a bank loan or HDB loan?
I think based on current market situation, a bank loan will be the way to go. But of course, you have that minimum cash requirement, which is 5%. So if you do have that 5% cash, then by all means go ahead lah kan. So, but when I first started out, I didn't have that 5% cash lah. So what happened was that, about in 2013, when I first bought my BTO, so I went with the HDB loan route because there's no 5% cash requirement. So, but what happened was that the moment I collect my kunci to my HDB, and because I know that it's post Lehman Brothers crisis and the rates has been kept low for quite a while, immediately 1 month later I'm out to DBS. So I enjoyed throughout my 5-year minimum occupation period. I enjoyed low rates, below 2% all the way. I think it was hovering on average, it was at about 1.6%. So I saved 1%.
I see.
That's because I didn't have the cash at that point of time.
Shamir, you mentioned about the Lehman Brothers and all that. This is the period when the interest rate was at a whole time high, right?
Correct.
Is that correct?
So Correct.
Right.
So interest rates was hovering lah. Pre Lehman Brothers crisis, they were at 3.7%, 3.75%, thereabout. So post Lehman Brothers crisis, the rates were kept low, and it is kept low for a reason. Is because you want to spur the economy lah. You want to make it easier on folks to be able to repay their mortgages, repay their business loans. So, and it has been that way lah, for a very, very long time. So they thought that the economy was about to pick up, I think, over the past 3 years. So the Feds actually, dorang naikkan, habis sekarang dorang dah turunkan balik because of what's happening in the market. So no one can really foresee the trend, especially COVID, which sort of affected the global economy, right? It's good times now, actually, for the home loan market.
Yeah, I guess for people who have their jobs and their business are not really affected, I guess, and they have money on the sides, this is the time for them to invest, right? Because of the low interest rates. And I've been hearing also from friends of mine who are in the real estate market saying that this is a buyer's market, and landed properties are on sale by about $1 million even. So I don't know, is it because of interest rates, Shamir, that this is happening?
Okay, so again, it depends on the situation. So right now, MAS has allowed for home loan customers to defer their mortgage payments. We will only know what will happen to these mortgages in January 2021, okay, because they're allowed to defer their mortgage. That means they don't have to pay to the bank at all, and the bank have to agree lah, kan? So, but people will start to know already in September, in October, even now already, they know already, alamak, I think my business is going to be affected. I'm going to lose my job. I think things are uncertain. So I better start putting my property on the market today. Because by the time they put their property on the market today, by the time they complete their transaction, it will be about 3 to 6 months later. So before their mortgages resume balik, I think I better start selling lah. Then if I need to sell, then what kind of price I need to sell, right? So if they had bought maybe years ago, to them, okay lah, market valuation, dulu aku beli cuma 500,000 je landed property. Now it's like worth 3 million. I don't mind letting go 2 million. I still make 1.5 million lah, right? So there are opportunities in the market. So just keep looking around lah. There'll be more to come, inshallah. I'm not saying this as I empathize with the sellers, but for the buyers, I think there will be opportunities, of course.
Yeah, true. Because like what Ardy mentioned, it is a buyer's market, definitely not a seller's market. So it's very difficult for homeowners to sell their home because they couldn't fetch the price that they want, right? So why do you encourage them to sell, when it's definitely not the right time to sell?
So it's about opportunities, right? Sure. So it's about opportunities, and it's about when the person actually bought their property. So it's about gains, right? So fine, I bought maybe 300,000 back then. Maybe now it's worth 500,000. Okay, but because it's a buyer's market and someone comes in and lowball me at maybe 400,000, for example, but because of my current income, because of my current age, and because of my current cash reserves and my CPF savings, then I see I am able to buy a landed property which is about $1 million undervalued, for example. So do you want to let go of your current property at 400,000 so that you have the opportunity to be able to capture a landed property at a discount? You have to weigh your pros and cons. Yeah.
I think for those who, like you already mentioned, bought the home like a couple of years back at 500,000, and now the valuation is say about 2 million, 3 million, like you've already mentioned. So that's, the profit is there. It's quite substantial. But what about those who just bought it like 1 or 2 years back? And I think the increase in price is only say about a few 100,000. So is it still worth it for them to sell? Not right.
So it's the same strategy. So it really depends on their capability today. So are they okay to live with the whatever gains that they have, or sometimes no gains, sometimes it could be a loss, right? But because you're able to unlock the cash or CPF in the home, so that you have the opportunity to reinvest in another asset class, in a better asset class, so that you can make back the gains lah. Tapi ni dah property talk dah, ni bukan mortgage talk, bro.
Okay. We'll stick to that. We'll stick to the topic then. Okay, because of COVID-19, We see a lot of interest rates are going down from banks.
Mm.
But banks are suffering as well because they are giving away very low interest rates, right? So do you think that in order to survive, they will increase it anytime sooner?
Okay, so you must understand how the banks make money, lah, right? So the banks make money from various channels. So one of it is they collect deposits and then they pay interest on it to the depositors, and then they take the same deposit and then they lend out in the market. So lending is various sources of lending. You can lend to your home loan customers, you can lend to your SME customers, you can lend to your corporate banking customers, and then you can also do corporate finance stuff with it. So this is very high level stuff lah kan. So they earn from various channels, fees, margins on their interest rates. So if I pay my depositors 0.25%, then I'm charging my home loan customers 1.5%. That is sort of my margin, right? I mean, in very layman terms lah kan. Of course, it's a little bit more complex than that. In terms of the banks making money, they will still make money, but how much money that they make, it could be lesser in given current times lah. Because now they will be more strict and more particular on who I want to lend my money to, whether individuals ataupun businesses. So they'll be very, very careful lah right now.
So does that mean it's more difficult to actually get a home loan right now, since they know that because of the COVID situation, some people are affected adversely. So would it be more stricter now to get a home loan?
So the same parameters actually still apply. It really depends on your profile actually. So since this is a business store, the employees usually not much of a problem as long as it's an MNC, they've been in employment for a couple of years, and their job nature is relatively steady lah. Of course, if you have a SIA cabin crew trying to apply for a home loan right now, I foresee some challenges kan, because we also don't know whether they're going to be laid off. So, but that's on the employee side of things. But on the business side of things, usually it really depends on the business owner. I see a lot of business owner not wanting to declare proper income because they don't want to be taxed, but to me, if you declare properly and you pay the tax that you're required to, it gives you the opportunity to leverage for your home purchase later on. So I do have some self-employed people, Shamir, I want 1 million loan. Can you advise me, how should I be declaring my income? What should I do? How should I structure my salary accordingly? So these are some of the advice that as a mortgage advisor, before you even go to the bank, I dah buat today. So the planning actually is 6 to 9 months, and usually it will start to intensify sometime in March, April season, which is your tax filing season right? So usually I will have a lot more inquiries from self-employed people during that time.
What is the difference between refinance and repricing? Because some people are just so confused between these two terms.
Okay, so refinance is when you switch from one bank to another. If you are with DBS now and I bring you over to OCBC, that's refinancing. Repricing is when you stay put with DBS. So you give DBS hotline a call, you say, hello, can I know what are your repricing packages now? So they will send you the latest packages. But sometimes DBS package is not as good as OCBC. You might want to consider to refinance to OCBC rather than repricing. If you reprice, then there will be a small admin fee you got to pay to DBS. If you refinance, more often than not, it's very little cash outlay, but the banks are very creative. OCBC wants to win over your business, right? They will say, hey, come over to me. I offer you cash subsidy, legal subsidy, I will cover your valuation costs. So come over. I give you better rate than DBS. So you refinance over. So that process of refinancing is something that we facilitate. So it doesn't matter whether OCBC, Maybank, we will tell you what are the benefits of moving over to them. Sometimes it's no cost. If no cost means if you reprice, you have to pay that $500 or $800 admin fee. If you refinance, there's nothing to pay. So it's just a process.
I have actually one question, Shamir. Basically, I'm looking at let's say a situation whereby husband and wife both have a job, and that was for like 10 years ago when they took the loan of, let's say, a landed property, right? Then after that, one of them lost their job. Can they still do a refinancing or a repricing? Because now I'm sure the salary of both combined will be much lesser, right? So
Correct.
how would that go about, Shamir?
Okay, so if there are any changes in the job, my personal advice is you try to reprice. Okay, so you're with DBS, right? And you've got no account with OCBC. When you refinance, OCBC will need to know who you are, what you do, what's your job, what's your income, what's your age. So they will need to reassess everything. But if they reprice, sometimes they may they may ask you what is your current employment status, what is your current CPF contribution, and all that. So it really depends on your repayment profile with, let's say, DBS. So DBS might think that the time when I first lend you, 500,000, you've been quite prompt on your payment over the years. I understand that maybe now you might have a hit in terms of your job. Then maybe they might ask you for your CPF OA balances, and see whether, and they might see your cash savings at the bank. And then they might say, okay, I think this person, okay lah, still can service the mortgage. So I don't mind repricing the person.
That's very good information, actually. Because, going forward, I'm sure there will be some couples who might be facing such a situation. Yeah.
Okay, Shamir. Recently, there's a CIMB hike from 0.1%. It goes up to 0.9%. So that relates to the questions that I asked earlier. What actually happened in this case?
Okay, so actually it's revert to its original already. So
I see.
So this basically is on your SIBOR packages. SIBOR is pegged to market, right? So sometimes it might go so low that it's like 0.2, 0.1, and might even go into negative territory. I'm not sure whether Ardy remembers, it's for 1 day or 2 days, that it just became negative, and the banks are paying you money, for money I pay you.
That is maybe that's the next question I want to ask, because even we have a negative interest rate situation in Europe, and we have also New Zealand. It's a recent news just last week. They said that they might actually go into negative interest rates. If that happens in Singapore, so what? The bank will pay us money?
No. They just put it at zero lah. So the banks are clever, right, in terms of how they protect themselves. So if it goes into negative territory, then they will put zero. But in CIMB's case, I think they initially put it. They have a certain floor rate lah. I can't remember the floor rate exactly. Maybe it's 0.2, for example, initially, or 0.1. That's the floor. That's the paling bawah sekali they can go lah. If SIBOR goes into 0.05, it will be at 0.1. So they hike this thing up, the floor rate. So which means based on current SIBOR trends, now SIBOR is below 0.9 already. So all the home loan customers bising hey, hello, now market is 0.55. You should honor your promise. Why suddenly you adjust the thing back to zero, the floor rate to 0.9? Mana fair. So the CIMB then decided to reverse the thing lah. And okay, we go back to 0.1 lah.
But this doesn't create confidence in people, isn't it? So if I am taking CIMB, would you advise me to go to other banks now?
It depends on your package. Sometimes you're tied in for the next 2 years or 3 years, depending on what package you took from CIMB. So CIMB is a relatively new player in the retail mortgage space. So they are new lah. I mean, DBS, OCBC, UOB dah lama, Maybank dah lama, Standard Chartered pun dah lama juga. So CIMB quite new. I started my career with Maybank before moving to CIMB. So I saw the growth of the home loan business lah when it first started. So they are still quite new, and so this kind of information, if you have a mortgage advisor advising, then at least okay. I tend not to, although I used to be an employee, tapi actually I don't have much loans going towards CIMB lah.
That's clear. Okay, now we know. I'm not going to CIMB. Okay, that's a very subtle thing. So listeners out there, you all know,
You have to listen to the song beneath the words lah.
Che. Okay, Shamir, sorry. One last one before we go for break. Okay, is it true that it's really difficult for buyers to apply for loan if they have never taken any loans before? Right? And is it true that the more credit inquiries a buyer makes through that particular bank would make that particular bank feel very nervous and disapprove the application?
Okay, so I tackle the first one first, right? So you're the sort, I don't like credit cards. I don't like
Right.
personal loans. I don't like to take loans. I want to settle everything via cash. Okay, so you don't have a credit profile. I don't know you as a paymaster, right? Because you don't have a credit card. But so each one of us has a credit score. If you have a credit card, then as long as you pay on time and pay in full every month, there'll be an A to your grading. So as you do this consistently over the next 6 to 12 months, then eventually you have an overall score. So you have AA all the way to HH lah. So HH, nanti dah terkeluar, outside of HH dah terkeluar ring lah. So as far as possible, I try to save people from falling out of the banding because of whatever credit issues that they might have. So, but if your credit is clean, you should not have any issue with getting a loan from the bank. But if you don't have a credit rating, the banks don't know you, right? Which is relating to your first question. They will look again at your profile. How old are you? How long have you been in employment? Is your employer a reliable MNC, or is your employer a civil servant? Are you a policeman? Are you a teacher, engineer? So your job nature, industry that you're exposed to, they will run further checks. They will make sure that this person has never taken any credit facility before. Then they might be open to lending you. On the second question, whereby this usually is applicable to those customers who have some kind of credit issue lah. So they apply different banks, right? So it shows when I pull out your credit report. By the time I pull out your credit report, then I see, banyaknya inquiry. Is it because if I'm Maybank, for example, and I see DBS, UOB, OCBC already run a credit check on you or for a home loan application, there must be some issue that they found on you. So I'll be less comfortable to want to lend you money.
I see.
So in those kind of situations, usually the local banks or those banks who actually are part of the CBS lah, kan, who report to CBS on their customers who have taken credit facilities with them, then they will go towards like your Hong Leong Finance, Singapore Finance, who are okay to take on that kind of risk lah, to want to lend you money lah, for your home loan purchase.
Okay. Should we go for a break? Because there are some questions from the viewers right now.
I think we can take on some questions.
Okay, awesome.
Yeah.
Talking about awesome, there's one guy called Awesome Handsome. Okay, that he did mention that those who go for DCP also get AA grade easily. So that's healthy AA or unhealthy AA. So which is which?
So for this particular case, it's very rare that I see a healthy AA for those who go DCP. But the moment you go into DCP, most banks wouldn't want to lend you anymore. So it will take a while for the DCP to clear before it resets again. And then you have to try, probably with one of the finance houses first, build up some kind of good rating again, so that your default, in our credit bureau report, there's a default column. It shows whether you've default before. So as long as that clears up, then should be okay.
All right. So there's another question from a good friend of ours, Nazrin. Thank you very much for tuning in, buddy. Right. So he was asking why refinancing with banks has a lower interest rate.
So it again depends on market right now, right? Pre 08, it was 3.5%, 3.7% back then. So it has remained quite low for the past 10 years. If you're talking about HDB loan at 2.6% per annum, the banks have been giving below 2.6% per annum for the past 10 to 12 years. So it's really about market conditions right now. Of course, no one can say for sure that it will remain like this, but the way things are going, given COVID situation, I don't foresee the rates moving upwards anytime soon.
All right. The second question is, when we refinance, is it interest on top of interest?
No. For example, if you're on a HDB loan and you're paying 2.6% per annum and you refinance and your loan amount is 300,000, for example, so 300,000, the bank will just take on the remaining loan amount, 300,000, and then they charge you the new rate, which is, say, market right now is 1.5% per annum. They don't charge you 1.5% above and on top of your 2.6% per annum. It doesn't work that way. They just take on your loan outstanding balance.
I think, Shamir, the question is being asked because people are thinking, banks are supposed to be making profits. So why are they allowing refinancing? And, are they so nice to the point that
Yeah.
they are giving
Yeah.
people, lesser rates and then, and they profit lesser. So how does it all work out for them? And, how can it be a win-win in that sense?
So again, the bank collects cheap deposits. That's why they are able to lend at such a rate, right? So the bank is still in the business of making money. So why do they like home loan customers? Is because the majority of home loan customers are actually good paymasters lah. Okay, they won't take on your case if you're not a good paymaster. So what happens is that it forms a stable asset class, asset base. Home loan, although it doesn't make the bank much money, maybe they make only like 0.2 or 0.3% profit on it, right? They make their money from the business banking and from the corporate banking type of clients, but they form a stable base, steady. At least I have something. I still am profitable, but not much. So the reason why they are able to do so is because they want your business. They want all these customers. But HDB loan, those who are on HDB loan also got to be careful, kan? The moment you go over to a bank, there's no way you're going back. The only way you're going back is if you're still entitled to your second concessionary loan by HDB. So there's some strategy involved if you want to switch over to a bank loan and some consideration.
Okay, there's another
Yeah,
question,
Adi.
right, Fazlin?
Yeah, by Muhammad Faizuddin Fauzan, because he's not sure if he's misheard. May you just reiterate again on why taking loans from bank for housing is better than HDBs for today's market?
It's all about interest rates, right? So you're paying lesser interest, so you're paying lesser RIBA, so you pay lesser lah eventually. So when you're paying lesser interest, that means every month you pay your monthly installment is broken into two, your principal plus interest. If you're paying lesser interest, it means that you're contributing more towards your principal amount. So which means that your loan pays down faster lah.
Okay, so basically, the interest rates, right, for if you get from private banks like DBS and all that, is now way cheaper than if you get it from HDB bank loans, right? HDB
Right
loans,
now, yes.
right?
Based on current market, yes.
Right now, current market. So going forward, we cannot say, right, how long this can last, but the trend has been like for the last 10 years, it has been like that. Am I right to say that?
Yeah. So if I were to share with you the little bit of history on CPF and HDB, right? So people always have this misconception that the loan comes from CPF. Actually, the loan doesn't come from CPF. The loan comes from HDB. But HDB, 2.6% is actually determined by CPF OA rate plus 0.1%. Okay, so CPF OA ordinary account rate is right now at 2.5% per annum. So they plus 0.1%. So what if for whatever reasons, right, CPF decides to increase their CPF OA rate from 2.5 to 3.5? That means all the HDB loan customers will be paying 3.6% per annum. Of course, what's the likelihood of that happening, right? Back then, when in 1975 to 1985, CPF OA rate was at 6.5% per annum. In 1995, it was 3.82% per annum. It only started to be at 2.5% per annum from 2005 onwards. Some interesting facts there, right? So who's to say now that you have more opposition party in government, that hey look, my CPF OA rate 2.5% per annum, mana cukup, not enough. Can we fight for more CPF OA rate? The moment that happens, can you imagine all the HDB loan customers will start to jump?
Okay, there's another question, Shamir. I've read an article before on the web, basically about this guy. He has a blog on finance and real estate and mortgage and all that. So he's saying that if you refinance, right, basically, let's say you have taken a loan of 20 years. So after a certain number of years, it goes down to pay the principal, right? It goes down to pay the interest first, right? Then it goes down to pay down. It goes to paying down the principal. Am I right to say that?
Depends on the rate.
Depends on the rate, right? So this guy is worried. In this article, he is worried. He's saying that if I refinance, that means, right, the money that I pay monthly will be going to paying down the interest again instead of the principal. So can you
No.
maybe clarify a bit on this issue?
Okay, so if I were to quote an example, right? If you are paying if your loan amount is say 300,000 and you are paying 2.6% per annum on your loan over 20 years, your mortgage is actually $1,600,
Yeah.
right? So $1,600 is broken into principal plus interest. So about 650 goes towards your interest, and about $1,000 goes towards your principal. So when you refinance, okay, when you refinance it to DBS, for example, which is at 1.5% per annum, you are paying more towards your principal amount. So the interest payment now becomes about maybe $370. Okay, and the
Okay.
principal amount is about 1,001 now.
The system that we have here in Singapore, it doesn't okay, for the first, if this is a 20 years loan, right? 20 years loan. So it's not like the first 10 years or whatever the mortgage has been paid to the bank is going to be paying down the interest rate, and then after the 10 years it goes down to paying down the principal. It doesn't work that way, is it, in Singapore?
No. It's split into two immediately, and they amortize it.
Okay.
They split
So
into
it's
two.
different.
So it's just about weightage. So if your interest is higher, okay, if your interest is higher, then you'll be paying more towards interest. If your interest is lower, then you pay more towards principal. So
I
it's
guess
always good to monitor your interest rate. There's always a threshold that you need to take note of. Of course, if your loan quantum is higher, you will feel it a lot more, no? I'm talking about 300,000 aja. I belum cakap pasal, those $1 million loan.
okay, all right.
So those $1 million loan, they will be in a even different situation to most people. So when their rate is at say 2.6%, for example, right? And their monthly installment is about $5,000. $2,000 is interest, $3,000 already principal. But when the rate tukar to 1.5%, for example, the $2,000 terus jatuh to 1,200, and then the principal naik to maybe 3,600. So you're paying more towards principal. If you don't jaga your interest, then tu dah nak sama dah.
Okay, so basically there is no setback if you refinance, right? In fact, it's supposed to help
you. It's supposed to help you lower your interest cost.
Okay, all right. That was the issue that was actually brought out in the article. So I find it quite interesting because, but I guess this person is situated in the US, so I'm not sure whether the system there and here is the same or it's
so
not.
There are some mortgage packages which pays towards the interest first. It really depends on the package that the bank is offering. I'm not surprised if
so you got to ask the bankers, right? Or rather, if we go to you, Shamir, you would actually advise us on this as well?
Yeah, correct. So I will actually show you like the interest allocation and principal allocation on your monthly installment, so you'll be able to have a better idea.
I see. Okay, thanks for the answer.
No problem.
All right. So I hope, or we hope, that Shamir have managed to answer most of the questions. Can we go and take a break right now?
Can. Second part will be more exciting, more for our Muslim audience.
Correct. So we'll talk about RIBA right after the second half or after the break. So guys, do stay tuned and we'll be right back after these messages.